slash coalition meeting. I'm so excited to have you on the call. Bank On North Carolina, and some of you on the call may know this, has been an aspiration or a goal of mine since I started in North Carolina in 2014. And I'm even more excited to have my friends from the Bankers Association, Peter, on this Zoom, and to have the support of the North Carolina banks. Peter and I were both researching how to bring Bank On to North Carolina around the same time, and we kind of ran into each other. And so excited to know that they were also interested and to have their support. And while they may be a little quiet on the call, their support around bringing affordable and safe bank accounts to the people of North Carolina is mighty. He's been very supportive. The Bankers Association have been very supportive, specifically promoting Bank On North Carolina to all of their 84 member banks. And as some of you may know, all of the large banks that are working in North Carolina or doing business in North Carolina offer Bank On accounts. But the Bankers Association is working with the community banks that represent the other half of the branches in our state to bring them on board. And so we're very, very excited and thankful for their support. Before we get started, I am going to go over some housekeeping things. This webinar, this meeting is being recorded. We will share it for you a little later. And this is a group discussion. All of you guys can unmute yourself or mute yourself at any time. Please be mindful of that if you've got things in the background, but also if you have questions or if you want to add to the conversation, please do feel free to do this. We want to maximize our webinar experience. No one's an expert. You don't need to be an expert. We're all here to learn, and we welcome your questions and your insights. So right now I'm going to briefly go over the agenda, and then we will get started. So we're going to start by laying the groundwork on why we need Bank On, with some information on the bank and on the unbanked and underbanked in North Carolina. And then we're going to get a Bank On introduction or overview from our friends for the Cities for Financial Empowerment Fund that actually are the national administrators of Bank On. And then we're going to hear from two banks with Bank On products right here in North Carolina. And then we're going to close with an opportunity for all of you to engage and get involved with Bank On through committee participation or coalition leadership. So with that said, I'm going to go ahead and hand this over to Victor. And Victor, you should have an opportunity to share your screen with the green tab at the bottom. And so I'll kick it to you, okay? And you're muted as well.
Okay, I'm off mute, so I'm gonna find our screen. Let's see. I think I need this one. Did it pop up?
We see it.
Okay, so I'm just gonna really go real quickly on these slides that I have here, just so that, just for the sake of time, if I can get it back to the first slide up here. So one of the things that we do at FDIC is, we all know about the unbanked and underbanked survey. It was changed in 2019 to FDI survey on household use of banking financial service products. And so out of that, I just gleaned just a couple of data points just for not only this conversation, but the conversation that we had before back in November. So I'm just going to re-highlight some of that. These slides are available for you guys to have. I sent it to Marquita. Marquita, feel free to just send out to everybody. But I just want to go here to this, just let you know that during 2019, the estimated households that was unbanked was around 100, and as far as that was banked, around 124 million were banked, but that left us somewhere in a neighborhood of around maybe 5.4%, or approximately 7 million that was not in the banking system. And so this number, though it's just a number just to put a pin in, is not an exact number because there's variance in it, right? So this is response to those who participated and response to data that we might have. So some of the new estimates or projection is that that number might be closer to 10 to 12 million folks who are not in the system. And then we add on COVID impact, those folks who are lost jobs, who have maybe fell out of the system. We might be back into numbers that are pre-2019, probably back to 2015 numbers. The good thing is that because of some of the subsidies that came from the federal government and the great work that some of these partners who are on this call and other federal agencies have done to encourage folks to open up bank accounts, has begun to shrink that number as far as who have access to account. But that doesn't mean they have a full banking relationship. They may just have like a transaction account where they can receive funds and move forward. So I want you to keep that in mind as we go through these numbers and understand that a lot of data that I'm just going to highlight is really about pre-COVID. I'm going to try to center it around on North Carolina. North Carolina is, because our state, we have really 3 buckets. We have what we call like an urban bucket, which is our larger MSAs, which are, from the Triangle, the Greater Charlotte Metro, High Point, and then we have just a small cluster down in the central part of the state around the Cumberland County area. Then we have the next called regional micros, which includes some of our western part of the state, eastern North Carolina, and then we call the hovers at the top of the state. If you go for those counties that borders Virginia, those counties border South Carolina, they kind of bleed over because of just the population and the business acronyms of those. So just keep that in mind, think about bank on. So, but at a national rate, we see that there's been a migration going down. This is good news, but also can be cautious because we know that the sampling size have shrunk from when we first started. That means that when we did it in the beginning in 2009, we had maybe 200,000+ that participated. But over the course of surveys and with technology and everybody asking people to do surveys, we saw that pool kind of shrink down to maybe 130,000 and then down to 80,000 who responded. So just be mindful that the breadth of the survey in the beginning was more wide. And as we've gotten closer to 2019, we kind of centered on just specific MSAs. So just want to be aware of that. In North Carolina, we're still hovering probably in the, I would say between the 3.6 to in certain markets, is up to maybe 9%. So if we did a drill down in certain counties, for example, so I did a quick drill in comparison to, let's say, a Wake Triangle area, a Charlotte Metro area, which has a unbanked rate that's hovering right at 4.1% to 5.7%. But if I go to within that and go to a specific census tract, we can see that number jump up to almost 12%, particularly if I go to a low to moderate income census tract. So because of the population and because of density, you have these numbers that gives a blend, but it's not indicative of representative of a particular community or a particular census tract. So sometimes I just give people caution that these are averages. So think about when you was in school and you was graded on a curve. You had some people at the top of the curve and some people at the bottom of the curve. And so you got to remember that a lot of the population you're talking about are going to be between that 50% and below. And I'm going to go to this slide here to kind of justify this. If you look at the reason, we still have a greater population of folks who do not want to get into traditional banks just because of false myths and just bad press and information out there. One, they just don't trust the banks, don't think they have enough money to engage in the banking system, or they just don't understand the fee components. And you have others who are doing a great job, or maybe it's a better job in swaying folks to participate in their financial platform, which might be a traditional bank, but a platform that they can at least utilize, ATM or use a card to make transactional purchases, but then now have the safety net of a FDIC insured account or a national credit union insured account or anything like that, or the other benefits that come with a full banking relationship. So we have a greater population that's moving that way, particularly our younger people, that we need to be concerned about. The forms in which most of them use, again, is really about transaction, paying for goods and services. And then at the latter part of that is saving for, emergency funds and things. And that's critical because we still know that it's a large percentage of the population who don't have that we call that magic number or that baseline number of $499 for emergency funds. So we still have a lot of population in North Carolina that if the car broke down, the roof started leaking, the heating system fell, or they just needed emergency money for medicine or something, they don't have liquid access to pull down on that still. And COVID has only exacerbated that. I want to give you this last point, and then I'll turn it back over to Marquita, just so we can have a more fruitful conversation. Based on ethnicity, we still see that Blacks and Hispanic and Indigenous, Native American still are the largest population that is not really fully realizing the banking opportunities in the full banking relationships. There's multiple reasons from this. Some is because, again, of knowledge, others because of just lack of equity. It can be from racial bias, what have you, racial wealth gap. All these things are layered or woven into this reason why they're not fully embracing that. And then on the ground, we've seen a lot of branch closures in minority neighborhoods and in areas where there's a high concentration of LMI or minority communities. So there's a multi-reason for that, but still these folks are working, have money to be able to enter into the banking system. It's just us having an approach to reach them and again, turn down those myths and building up trust and meet people where they are instead of expecting them to come to where the relationship is as far as a financial institution. And this is not just limited to just a minorities, or not limited based on just low income. This graphic here shows you that it can go up to folks who are over the $75,000 mark. So you have folks who are making good money. So if you want to put that in context, this includes your teachers, your nurses, your firemen, your police officers. This includes folks who are bank tellers, bank managers, and even down to what we call our professional services providers, who average within the income spectrum in North Carolina within this income bucket. If you see that, we still have almost 12% of those folks who are not participating in the banking system. And then you have some who are not really fully participating. They might have an account, but they don't have a relationship with the bank. So I'm gonna stop there, Rakita. And again, this information is on our website at FDIC or economicinclusion.gov, and we get more into that. And I'll address any questions that we might have as to the data, but I don't want to spend a lot of time just going over the data points. I think we can use this as a launch to really talk about the need. And the need is great in North Carolina, particularly in certain markets. But I think the more we can get folks to understand the importance of a bank on, or the importance of how we can bridge that gap, the better we'd be holistically as a state, and we can create economic mobility.
No, thank you, Peter. Thank you, Victor. This was very helpful. And I think it provides a great foundation, or provides a little bit more clarity or understanding of why we're all on this call today. Right here in the triangle, as you said, and some of you on the call are not in the triangle, but things are a little different as you get to the corners of our state that are less urbanized and more rural, and their access to banking. And I think it's very important as we move through this that we keep that in mind. So thank you. So we're going to open it up for any questions for any folks. You can put it in the chat or you can unmute yourself. I know someone asked about a copy of the presentation, and any of the materials that are presented today will follow at some point, either later today or tomorrow, via email to everybody on the call. And it doesn't. Go ahead, Ginger.
Oh, I'm sorry. I just wanted to make a comment. I thought it was extremely helpful when you talked about digging in deeper beyond what the state levels of unbanked or underbanked are, and talking about census tracts. I think that's critical, because people may see an overall state average and think, oh, not that many. But then when you jump into those census tracts and you have percentages like 12% or more, that's eye-opening.
Yeah, and when you move from those census tract and even to we call like counties, right? If you go to the county level, there are counties that are hovering where you have less than a third who have full banking relationships, because there might be a population of seasonal workers, or there's some we call like, like the food deserts. They're also financial deserts, right? So they have to drive at least 45 minutes to get to a branch. And because of connectivity with broadband, it creates other challenges. And so we don't think about that for those who are in urban population have access. But if you ever been driving through North Carolina, you get those dead zone pockets on your cell phone when you have bars. So think about if you live there. And so we have to be mindful of that, and be mindful that our younger generation, for whatever reason, they're not, their pathway is not into traditional banking systems. So they might have connectivity, they might have access, but for whatever reason, they choose to go to another platform.
No, that's true. Thank you. So a question came in, thanking you for the data, and asked specifically about Asian Americans. Most data and graphs don't always have information on this population. Do you have any insight or anything to share about that, Victor?
Yeah, so if you go to, you just Google economicinclusion.gov, you can pull down the historical data. It's downloadable, it's free. You can just aggregate it and pull out the Asian community. One of the things about the Asian community, again, it's going to be most relevant for communities that have a higher population at a community. For example, if you look at it on some of our Western states, the Californias, even down in the Florida area, you might be able to get a snapshot of what's happening in that population. Again, another misnomer is that, when you look at that, it depends on how they classify themselves, right? So it's based on how they identify themselves. So there's some data on that. There are organizations that we work with at a national level, like Association of Asian American, who kind of go in and do more of a overlay with our data and other data around for the economic mobility of that population. That's something that we want to hone in on. Just let me know. I can reach out and maybe we can kind of make sure that all races and ethnicities is representative. But there's data out there for most of the population, as long as people are willing to share their information.
All right. Well, thank you, Victor. If there are not any other, there's one question. Can you share the programs of inclusions that have been successful in rural areas?
So is this for me?
I'm wondering, is this for him or is this for Bank On in general? And this is El Costa. I'm not sure.
Well, I'll go ahead and
Bank On in general. This is a Bank On in general. So we'll talk a little bit about that shortly. And I'm not sure, it says El Costa. We'll get on that a little bit shortly. Okay. But if there are any other questions for Victor in this FDIC research? If not, we will move on to someone, to David Rothstein. And David Rothstein is with the CFE Fund. And for those of you who don't know, they manage Bank On nationally, and are working with us very closely to launch Bank On North Carolina. And so I'm going to hand it over to David, and he's going to provide more context to Bank On a national level and Bank On in general. He's going to talk about program integration, and then later on we'll talk about some rural Bank On programs that the previous person had asked about. So David, you can share the screen and take it away.
Okay. Let me just do the shared screen piece, make sure that this is going to work. So thank you very much for inviting me to speak here today. I'm very excited to be working with all of you on Bank On. I have done Bank On work now for more than 5 years, and we continue to be excited about state coalitions and local coalitions who are interested in financial inclusion work. So let me pull, even though it's letting me share my screen, the slides are not necessarily coming up, but that's totally fine. I can, let me talk to you guys while I'm figuring out what's up. It's no big deal. So Bank On is both a national and local program. For many of you have probably heard about some of the local work that's going on, but nationally, our work centers around the concept of working with financial institutions of all shapes and sizes to help create safe and affordable checking accounts, and then working to help them get people into these accounts. Now, it's important to note that it can take some time. It's not an instantaneous process, right? For financial institutions to create accounts. So we are always looking at this from a perspective of how can we help a financial institution with their core service provider or whatever it might be to get them going. That's a big part of what we do. Oh, okay, here we go. I think I figured it out.
I'm sharing my screen from what you sent me yesterday.
Oh, okay.
David.
I was just going to do that.
Yeah, I'll advance it, or just let me know.
Right.
I'll advancing it for you.
Okay, I just can't. Okay. So why does banking access matter? Why is the FDIC concerned about this? Why is the NC Collaborative concerned about this? So two big camp reasons why this matters. The first is that being unbanked is expensive. It can cost people at least 10% of their take-home income when they don't have a bank account, because they're going to have to cash their check or pay to put money on a prepaid debit card. They're going to have to pay bills. Dealing in cash without an account is very expensive. The second main reason and camp is that we know that all of the other financial inclusion pieces that we're all interested in helping customers, clients, whatever, achieve, they really hinge upon that keystone of having a checking account. In our own studies of our financial counseling cities, we have another program called the Financial Empowerment Center model, where we work with city government to provide free one-on-one financial counseling to individuals in the city. And our measurements have shown that unbanked financial counseling clients were half as likely to increase savings and over a third less likely to establish a new credit score. So we know that it's necessary and sufficient to have an account to achieve all these other financial inclusion pieces that we're all interested in. You can advance. So I started to talk about this as I was juggling looking for slides. The Bank On model is that we work to bring certified accounts into the marketplace. And we do that at the national level, but we also do it through our 90+ local and state led coalitions. Those coalitions work to help get these accounts into program payment streams where people are receiving refunds, reimbursements, paychecks, whatever it might be. We also have are grateful for our partners That includes partners like the FDIC, that includes partners like state bankers associations, our core service providers that are out there that are, the group behind the financial institutions that help with all the payments that are coming through. And then, of course, groups like the American Banker Association itself have been really helpful in working to make this happen. You can advance. So our big work set has been to continue to expand accounts, but also to continue to expand coalitions. The white dots on the map represent where we have coalitions. And again, some of those are state and some of those are local. The coalitions serve as programming arms, they serve as marketing arms, they help bring smaller financial institutions that we would never have met or have relationships with. They help bring them into the Bank On interest and financial inclusion interest. You can advance. So coalitions themselves, what do these coalitions look like? And the North Carolina one is shaping out to look just like this, which is exciting. So financial institutions are part of the coalition. That includes banks and credit unions of all shapes and sizes. The coalitions are often led or organized with groups like the United Way, urban leagues, LISC, neighbor works organizations, and then direct service organizations. So groups that provide financial counseling, free tax preparation, housing counseling. Your nonprofits are a big part of this work. Local government or state government, depending on the coalition, of course, are important pieces. So jobs and family services departments, departments of aging, treasurer's offices, attorney general's offices, they're all in mayors and managers. Their role in finding the payment pieces that have programs are a big part of this as well. And many coalitions are often led by them too. And then, of course, your regional regulators that include the FDIC, who we just heard from, the OCC, Federal Reserve Bank branches, state associations and regulators, they're all part of this coalition. And all the coalitions are a little bit different in terms of who runs them and how they're shaped. And that's part of the neat part of this work. You can go to the next slide. So what does it mean to have a Bank On account that you've kind of heard about? Well, about 8 years ago, we sat down with leaders in the field, including financial institutions and regulators and nonprofits. We all got together to decide what a national account standard could look like. What's the floor for one of these Bank On accounts? And we wanted them to be comprehensive. We wanted them to be designed with consumers in mind. We wanted the litmus test to be what is safe, affordable, and functional for a consumer. We also thought it was really important that these accounts were sustainable and valued by financial institutions. So the first piece of these standards is that they cannot have overdraft or insufficient fund fees on the account. This is important because this is the #1 reason why people lose their bank account, is through overdraft and fees that incur through overdraft. Many of these accounts are checklist checking accounts, meaning they don't have paper checks with them. So financial institutions can feel safe about not having to worry about charging overdraft or insufficient fund fees. We also require that these accounts are affordable. The accounts can have a monthly maintenance fee, but the monthly maintenance fee has to be all inclusive, not a la carte, and it has to be $5 or less per month. We also require a low minimum opening deposit of $25 or less per month. The affordability piece is crucial. It's so crucial. As you heard from the FDIC, more than 38% of respondents in the Unbanked survey noted that cost was their #1 barrier and reason why they don't have a bank account. It's the commonly most cited reason over and over every 2 years that they do the survey. The accounts also have to be functional. You have to be able to pay bills with them, make deposits and withdrawals in branch or at ATMs, and you have to be able to transfer money and have have the services that are common with other bank accounts have to be common with this one as well. When we receive the terms and conditions of the account, we certify it. We give the bank or credit union the name of the account on their seal, and they can put that certificate on all of their media, website, handouts, whatever it might be. Currently, we have 165 financial institutions that have an account that meets the standards, and we have about 30 more on the way for the next few weeks and months to be active. Very exciting. You can advance. So how do we know that this is working in the field and in the marketplace? Based on data collected by the Federal Reserve Bank of St. Louis through voluntary work, where financial institutions can submit aggregate data, we had 10 financial institutions in 2019 submit data. We found that close to 60% of certified accounts that were opened by customers in neighborhoods with 50% more minority population. So our target audience is opening these accounts. We also know that close to 48% of US bank branches offer at least one Bank On certified account, which is extremely exciting. So we're nearly 50% of the bank branches in this country offer a Bank On certified account when you walk in the door. We also know that these accounts are really popular. Again, with only 10 financial institutions reporting out of the 40 that were eligible at the time, nearly 2 million Bank On certified accounts were opened in 2019. So again, these are not just accounts for the unbanked. They're very popular among first-time workers, among people returning from the criminal justice system. They're very popular among millennials. These accounts are fully functional bank accounts. You can advance. Other data to show how robust this market is. 85% of accounts opened in 2019 were opened by customers new to the financial institution. We get asked all the time, won't this account be a burden, or won't this account take people away from our current checking account? And the resounding answer is no. Most of the people that are opening these accounts are coming specifically to open these accounts, which is perfect. That's exactly what we're hoping for. We also know that these accounts are used like other bank accounts, but have even more debit card swipes, which creates additional transactional revenue for the financial institutions who support them. But we also often get the question, won't people just pull all their money once they get a direct deposit out of this product and into cash? That's not what we're seeing. We're seeing people using this like any other credit card / bank account product that they have. Withdrawals, deposits, only 1/3 of customers solely use direct deposit for their deposit needs. So people are taking cash and check and putting them into these bank accounts, which is extremely exciting. That's exactly what we had hoped would happen, but you get very nervous that, maybe this won't be an account where people would take cash, walk into a bank branch, take the cash and put it into the account. That's sort of the holy grail of reaching the unbanked population, right? So that's good to see. You can go to the next slide. So when I talk about sort of expanding into, connecting people to bank accounts, we think it's extremely important, and our nonprofit municipal partners through coalitions are the ones to do this. We think it's extremely important that there's a pipeline of accounts to be opened. And the best way to do that is to partner with a program that's serving people and seamlessly enroll them in bank account access to receive whatever payment it is that they're getting. So maybe that's the advanced child tax credit. Maybe it's an apprenticeship program or a job training program. Maybe it's free tax preparation. Whatever it is, we want to make sure that we're connecting free tax prep to that program. You can go to the next slide. So these are some examples of places that we've either funded through pilot funding or worked with coalitions to make some of these banking connections. We have put a ton of dollars into marketing during the COVID for all of the COVID relief programs. That includes things like the stimulus payments, that includes the advanced child tax credit payments, unemployment insurance, specifically the expansion of it. Those are places where getting a paper check is not optimal. And in some cases, huge delays in being able to get the money that families really need. We've also connected and done some work around places where there aren't necessarily payments, which includes domestic violence, youth aging out of foster care, and first-generation college students. These are the most likely of camps of people to be unbanked, but often they're not places where there's payments made. So it's harder to get them banked, but our coalitions have done a lot to sort of bridge that gap. You can advance. Why was banking so important during COVID, and why was Bank On such a good solution? Well, some financial institutions literally had closed down their inside of their banks. So being able to pay bills remotely and bank from home was critical, and all of Bank On accounts allow people to do that. Also, people had a hard time reaching different kinds of customer service. So maintaining control of your account and avoiding any kind of surprise fees and not having to deal with extra fees during a pandemic was really important as well. You can advance. So we created a COVID banking page that still exists. This is a specific sub page of our current work. This is a list of places where people can open accounts online virtually, instantly get an account number, and then use that account number when setting up direct deposit for whatever the COVID benefit that they're receiving is. And that's what I have for you all today. That's where we're at with Bank On. We are thrilled to have North Carolina be part of our effort. We obviously value our partnership with the Bankers Association in North Carolina. That's continued to grow. And they've been extremely open and welcoming to this work. And of course, Victor always does an excellent job of helping to provide technical assistance for banks who are interested in learning about how they can get CRA credit for this work, et cetera. So, however we can collaborate, however we can help, please let us know. And with that, I'll take any questions and turn this presentation back over to you.
Hi, I lost my mute somewhere. So I'm using my space bar. Sorry about that. So thank you, David. Thank you for that information and for walking us through that. And as David said, are there any questions or anything before we move forward?
David, this is Peter Walton with the NCBA. Just a question that bankers who currently do not offer certified accounts, Bank On certified accounts, how long does the process take? What can they expect when they first engage with you? I'm sorry, you're muted, David.
I am, I'm sorry. So the truth is that the process on our end is quite quick. Our turnaround time is about a week or less to certify the account. It's mostly, how long does it take for the financial institution itself to create the features that make a product become certified. So, and that time period and time frame has continued to decrease, which is great, with partnerships like with the Bankers Association, who can help, like our extended network of connecting a financial institution to another financial institution who's gone through the same, who's gone through the same thing that they're going through. We have most of the core service providers we have contacts with, so they can also help with the behind the scenes things that need to happen. That all has decreased the amount of time, and we also pre-certify accounts, as Peter knows. So for a financial institution that wants to do this, they want to know, and this makes sense, I don't blame them. The financial institutions want to know going in if their account is going to meet the national account standards. So we'll look at an account and pre-certify it before it even goes live.
Very good. Thank you, Dave.
Sounds good. And we actually just launched a poll to get a better idea of how familiar you guys on the call are with Bank On. So if you guys can do it, we've got 56% participated. Love to get 100%. If you could let us know, better inform how we can respond and provide you guys with information.
Marquita, I see a comment in the chat about how do you encourage a bank to become a part of Bank On in small communities? And I'm sure David have multiple examples, but in my experience, you know, as David said, when we work with Bank On partners, stakeholders, is really to not try to reinvent the wheel, but in small communities, most small communities, if they have a bank there, they're already tied into municipality deposits, whoever the employer, the dominant employer in the area is, as well as the small business community. And that's where you start at. You just already show them that they already have the customers there. And it's just a matter of just creating that product to bridge the opportunity to gain those, to get those customers there. So it's not any magical thing other than just bringing folks together and say, hey, here's the need and here's the opportunity already there. And so that has been successful in some of the markets that I work in, where I've seen smaller bank, community banks and small rural communities look at this, not only for existing workers, but also to build financial capacity for young folks who are coming out of high school into the workforce.
Good stuff. Thank you, Victor. And that was a good question. There's another question or a comment from Carter Bank. I don't know if you're familiar with them, David. They're in the Martins. They are near the border. They've been working on a Bank On product internally for several months. I think she was sharing that more so than asking a question, but we're excited to hear about that, Beverly. So I'm going to share the results, and it seems like a lot of folks on the call have heard about Bank On and have a general understanding, and some are not familiar with the program at all. So I encourage you guys to get the understanding and the knowledge, like we have the experts on the call. So the questions that you have, please push them through and send them our way. I see Jose. I'm going to ask you to unmute. Your hand is raised. Go ahead and ask your question.
Thank you. Good morning, everyone. My question was in reference to the immigrant community and individuals with different statuses in this country. Have there been any studies made on that group of people and whether this project will be able to assist in getting them accounts? And this can range from folks from undocumented community to folks that are here for temporary work with an employment card. Any thoughts on that?
So we don't have a requirement that financial institutions to be part of Bank On have to accept ITINs. But many of the smaller financial institutions actually work with customers and help them apply for the ITIN specifically to open one of these accounts, which is really exciting. We do provide technical assistance and a strong recommendation that they accept alternative IDs. So just to kind of give a broad overview, the three biggest barriers for people to open a bank account who want to are ID, which Jose is talking about and alluding to, having a permanent address to put on the application, and being on check systems or early morning systems or whatever it might be, referred to as. We have seen some really innovative work to bring people into the banking systems on all three of those issues. Again, the alternative ID thing has gotten better. There's still a challenge about accepting municipal IDs. Financial institutions many of them do not feel comfortable with those yet. So that's still an issue that needs to be worked on. And then, most of them are now accepting things like tribal IDs or matricular IDs. So I think we are improving there. The permanent address issue, there's a lot of case study work that's been put out to let banks and credit unions know that there is more flexibility than they realize in what constitutes a permanent address. Could be a work address, could be a shelter address for an administrative office, could be a parental address. There's a lot more there than when we started to look at this, some 8 years ago. And then the final thing around what a lot of people face in terms of past negative history with accounts. We have a new announced partnership that we just announced during our conference in November with FIS, who is the creator and manager of check systems. They now have a product that is specific for Bank On that financial institutions can use to screen people for a Bank On product. It's a very different type of result-based formula that looks at really only instances of dramatic or direct fraud as a reason to pause on an account, but is much different in terms of its recommendation for people to have access to accounts than a traditional sort of background check. So those are the ways that we're really trying to work to make sure that the people that need to get into the system and want to get into the system are able to.
It may be a one-on-one conversation, but how have you gotten around to banks accepting the EIN number? I mean, just in our market here, some banks do, some banks don't. There's no rhyme or reason as to why. Do you have any input on that?
Yeah, I think it's all depends on the risk departments and the priorities and what they feel comfortable taking. I don't know how and why they which banks accept and which don't. It seems to be a case by case basis for sure.
All right, thank you. That was a good question. Thank you, Jose. Jose, can you share who you're with, what organization you're with? I'm just curious.
Sure, I'm with American National Bank in Greensboro, North Carolina.
Okay, thank you, Jose. Thank you. All right, so we are going to move on to hear about some current Bank On programs that are happening in North Carolina or banks that are offering Bank On. And so I'm going to turn it over to Ginger Salt from Piedmont Federal Bank. Hi, Ginger.
Hi. Good morning, everyone. Appreciate the opportunity to speak today and so excited to be part of this group. We embarked on our journey and had multiple conversations with David, so it was great having him as a resource. We realize, we have pockets in our community that have a large number of unbanked or underbanked populations, and we really wanted to reach out and engage folks. I think what's so disturbing is to see how many predatory non-banks there are out there, but we also realized, of course, as has been said, banking can be intimidating and very frightening for people. Just think about it. I mean, you come in a bank and there's this big bar of a teller window. It's kind of like a barrier. So as we began our process to develop the account, as David had mentioned, we talked through some of the parameters and some of our priorities. We wanted to make sure it was easy. We wanted to make sure it was accessible, that we had the ability to have them open an account online, that they didn't have to come to the bank. We also wanted to make sure that we had, followed all the provisions in terms of having a very modest fee, a $4 a month fee, et cetera. And so we did work with a group of folks in the bank made up of multiple departments, frontline facing, back office operations, et cetera, so that we could really consider all aspects of the account and how to attract people. And then one of the things that David provided us that was extremely helpful were a couple of other banks that had implemented the program. And the great thing was they were kind of two different banks. One was more of a, it was more of just featuring it as a digital account, and not only did it appeal to underbanked, but students, people just getting started. They, allowed the online account opening and self-service. They did require e-statements. If they wanted a paper statement, then they did charge a fee. And basically, they were talking about lots of people used it. They did a lot of digital marketing around it, and it was really featured as the digital account. The other bank we spoke with had a smaller number of account holders, a little bit smaller asset size, but they also wanted to appeal to people that maybe had an oops in the past, you know, in terms of if they had less than a certain amount on check systems. I mean, if they had a positive check systems balance, they didn't want to keep them from being able to open the account or make restitution to have the account open. Now, they did have a pretty, you know, strict guideline on fraud, as we all should. But if somebody had an oops or had a situation in the past, we didn't want to penalize folks and drive them into a predatory relationship. We really wanted to make sure we included those folks and had them have a chance to have a banking account. So both of these banks were doing a great job. So we just decided to why don't we do what we think is kind of a hybrid model on our particular program, and ours is called PF Boost. Why don't we, you know, let's talk about the online account opening, and if they can fund the account with $20 or less, that's great. If they can't and they want to wait for direct deposit, they can actually come in. If they've had amount of check systems of less than $500, we're not going to tell them they can't open the account. So that's how sort of the things, we use that comparison. We had multiple discussions with David to kind of develop our product. And it took a little bit of time. As David says, the certification process is pretty quick. But we were kind of going back and forth on some things and wanted to make sure we had them nailed down before we became certified. So our certification took place at the end of September. We've opened a handful of accounts so far. Many, and I was trying to get the number, but many of them, or the ones that we have opened, have been the second chance accounts. And, you know, our teller staff says, you know, it was so depressing to tell people, I'm sorry, you have $200 on check systems, you can't open the account. And, you know, you'd see their faces fall. And now we have an alternative. We have the PF Boost. They're excited. They're opening accounts. And so we're excited to be able to do that second chance. But one of the things that we want to really gear up with as we move into the new year is a more proactive approach. Some of the things that we're doing, we're reaching out to nonprofit partners. We hear loud and clear about the banks being very intimidating. So what we want to do is to be able to partner with them, be on site. There's a program called, it's CARES, but it's like CARS. It's capital CARES. And this is an organization, a nonprofit organization that makes very low interest rate loans on used cars so that people can get to work. It's especially tailored for those with modest means who need a very low loan, that maybe don't have credit or maybe don't have good credit, but want to get back, want to work, want to have transportation. A lot of these people are underbanked, so we've talked with them about being on site during one of their lending classes as they talk through the program, and we can open accounts there. The other thing we know loud and clear is that we need to go where people are. So one of the things that we are looking at doing is accelerating our tablet banking initiative so we can go where somebody is, not making them come to us. We are also launching our Bank at Work program. That will be launched in early January. We are reaching out to a number of firms that have a larger employee base that are unbanked. So this is a great time to come on site. You know, if your HR director at your company endorses your bank, then the bank employees, then the employees of that company are likely to trust the bank. So we're excited to be able to have this PF Boost account in the quiver to offer people that want a simple, consistent banking experience. So we're continuing to want to build on partnerships. within the nonprofit world. We feel like that's a great way to get the word out. We feel like, of course, our own board members, we have some board members that on the Piedmont Federal Board that have a large percentage of unbanked or underbanked staff. So that's a great place for us to start as well. But we're continuing to look for ways to enter into the community and promote the account. And I was delighted to hear that North Carolina was proceeding with a coalition, and I think we'll get some great resources from there. Any questions or thoughts? I realized that kind of came out fast.
Thanks, Ginger. That was this has been very helpful and excited, and I think that there are probably some folks on the call that can connect with you, being that you guys just I think you said September.
Yeah, it was the end of September, so we're brand new.
Yeah, and I'm excited. I know you're excited to hear the numbers. I'm excited to hear more testimonials from folks that have come in and gotten this opportunity. This is great. And so I have a few questions, maybe not for you, Ginger, but just in general. And one of them is probably for David or Victor. What is considered a permanent address? And we may have already addressed that, but I'm not sure.
Yeah, that's a good question. If Victor's still on, he might be able to provide a link to this. I generally, I've used there, there's a lot of interagency memos or Q&As that kind of go into depth on what constitutes under Know Your Customer, what constitutes a permanent address. There's also I think it's Cornell Law did a review kind of diving into the different pieces and parts that make up, what an address is, but it's also gonna, the financial institutions themselves have a lot of space on this to determine what they want to use and what they feel comfortable with.
Sounds good. So someone also said thank you for the specifics on the check system. And so I don't think we have any other questions, Ginger, but hang tight because some may come through. But thank you for sharing that information. So now we're going to talk with Tamika Reed from PNC. They have had Bank On products in North Carolina since I've been here. And she's been working with an organization in Goldsboro, Bank On Wayne. And so Tamika is going to share a little bit about what they're doing and the Bank On Wayne program. So go ahead, Tamika.
Yep, I'm here. So
okay.
Good morning. Good morning. So thank you, Marquita, for allowing me to share our experience with the Bank On program. I'm here in North Carolina. So I'm Tamika Reed, Community Development Banking Specialist here at PNC. And what I do, I work with nonprofit organizations that have a focus on the low to moderate income communities. So at PNC, we believe that every decision is a financial decision, and our mission is to give our community the confidence and information and tools you need to make informed financial decisions to help you achieve your goals. So that's why we believe financial education is the key part of our commitment to our customers and our communities where we serve. So whether you're need a refresher into banking or you're new to banking, we can help you learn how to manage your personal finances. So over the years, we've partnered with Literacy Connections in Wayne County and to help support with their Bank On program. So we have our local PNC representatives provide financial education using FDIC Money Smart curriculum. And we provide that according to Bank On's schedule, how they want us to facilitate. So PNC, we have two products that we can offer to our clients that are in the program. One is called our Smart Access Card. So you have direct deposits, you could track your spending, you check your account balance. What David mentioned earlier, you can deposit your cash at local branches or using a Visa Ready link to deposit cash at our PNC ATMs or transfer, online, using online banking. And then we have our Foundation of Money Management account, which is like our second chance checking account. And so, clients, again, you have your financial education seminars, that you will complete. You could do that in person or online, and that just gives you an overview of banking basics and budgeting. So we partner with Bank On over the last few years, but it kind of went to a stop in 2020 because of the pandemic. So Bank On decided to record all of their sessions, but hopefully in 2022, they will go live and we will be able to participate in those presentations again to the customers and clients in Wayne County. So our goal with Bank On is to definitely work with our local nonprofit organizations just to let them know about the program, because this is a great program that we can offer to our youth groups, our workforce development groups, and any, things that can help our community get a leg up in banking. So that's our partnership with Bank On here in North Carolina, and I'm looking forward to being part of the roundtable and more ongoing discussions. Thank you, Marquita.
Thank you, Tamika. And so this is a question probably you, Ginger, or David could answer, but someone's asking about financial literacy and Bank On. And I don't know that we've really hit on that. I know that you spoke a little about it, Tamika. So interested in how you guys have done that, and you too, Ginger. And David, if you want to chime in on any financial literacy requirements for Bank On.
I could very briefly, because I think Tamika would be the expert, probably David. It's interesting, when I was talking to the banks, and I was talking to David and others, we don't require financial literacy because we don't want any kind of a barrier, but our hope is to be able to attract them with this very consistent, manageable checking account and then interest them in it. I'm a big believer in financial literacy. I think it starts at birth. I wish I'd had it, but it is, we just didn't want people not to open the account because they felt like they were required to complete something. However, what this is leading us to do is, once they open the account, to provide them opportunities to learn more. And as a result, we are going to be starting a credit builder product in first quarter with like savings secured loans. So we would hope to kind of get them interested and build credit. We're just not making it a requirement before they bank with us.
Thanks, Ginger.
And so at PNC, with our foundational money management account, if you come into our banking center and you're on check systems, I believe as conditionally approved, then and you still want to open up an account, we ask that you complete this online financial education workshop, which I believe is like an hour. And then after that, you get a certificate and you can come back into the branch and open up that an account. This is something that we offer that's unique. We partner with nonprofit organizations that are looking for banks to provide this additional asset or additional tool to their community to help our community just understand the basics of, banking, budgeting, and so forth, and understanding how the banking system works. So it's just something that we offer as in addition to some of the services that the nonprofits are currently doing.
Thank you. And so, David, it sounds like because they're, each bank has, they autonomously decide whether or not they are requiring financial literacy if they want to offer it, is what it sounds like, David, correct?
Yeah, that's right. We don't have a requirement for it. And in fact, I thought Ginger's point, and she made it very quickly, but still important, that any barriers for somebody to open an account make it harder for them to do that. And so, we want to get them into the account as quickly as possible, because it's certainly a do no harm account. And then we can use that account to establish a relationship, to start that process of financial empowerment counseling, whatever you want to call it, because you have that relationship. You also, I don't know about you guys, but I learn better when I have a tangible something to learn, right? Like, so if you want to, if you're learning some, algebra, having a problem in front of you to actually learn the concepts is much easier than just the theories. So having somebody with a bank account and using that bank account to teach them, download your app, and here's how to look at a statement, and here's where, what a withdrawal looks like, and here's what a deposit looks like, those kind of things. It makes it, I think, a little bit easier to do some of the educational pieces that groups are interested in doing. And the counseling side of the equation, it's just so complicated. Counseling programs, ones with strong curriculums with professional counselors, that's a whole different ball game than, a 20-minute seminar on, what does it mean to save? What does it mean to spend? So that's we could have a whole nother, meeting on that, but that's kind of how we view this.
Sounds good. This all makes sense. So thank you, Tamika, for sharing what you guys are doing. This is great. I think that PNC specifically, with your reach you got and your work with nonprofits, going forward nationally and especially in North Carolina, PNC is going to be a strong, supporter and integral player in our Bank On coalition. So thank you for the work that you're doing. So the next thing that we want to talk about is our Bank On North Carolina coalition. We've got a lot of information about Bank On. Please keep the questions coming. We've got the experts here to answer them. But what we want to start doing now is to start the development of our coalition. And this coalition is going to lead the Bank On efforts across our state. This is our first time being able to get together. Some of you are on the call because you filled out a Bank On interest form survey. Some of you had reached out to me. Some of you I have talked to about it. Some of you are bankers, and Peter has talked to you. Some of you are bankers, and Victor has talked to you. But there is a role and an opportunity and a need for everyone on the call to participate. And so what I'm going to go through now are some opportunities for you guys to engage and to volunteer. At the end of this, and actually I'll go ahead and get Maria, if you can put that link in the chat now. There is a link for you guys to sign up to participate. But before you sign up, let me let you know what you're signing up for. So the first thing that we're going to do is we need to create a Bank On leadership team. Uh-oh, Maria, you're sharing your screen and I lost you. Okay, the first thing that we have is the Bank On leadership. And the Bank On leadership team is going to be made up of committee members that we'll get into a little later. But the Bank On, and plus 6 additional at-large members. And so these 6 additional at-large members could be, if you could go, here you go, would be community-based organizations, banks, credit unions, local government, financial educators, youth, all of you on the call would be great at-large members or members of the committee. The commitment would be participating in a bi-monthly meeting. The leadership team is going to look like the steering committee. They are going to be helping to steer the work, to provide some guidance and support. We're going to be supporting the committees. And the commitment for the leadership team would be about 10 to 15 hours annually. So think about it. And there's a survey in the chat for you guys to all complete to sign up for something. Maria, if you could advance to the next slide. So we have a leadership team and then we have committees. And I borrowed this from another Bank On organization, but we're going to call our coalition committees pairs. And I'll explain why in a second. But each group is going to be chaired by one of the members, and they are going to do committee work. And this committee work, you guys, the committees will meet a little more frequently. They will be very hands-on, develop work plans, and the commitment is about 25 to 30 hours a year. And this is broken up in a year, so this is probably like 30 minutes a week, and probably some weeks or months, no activity, and sometimes more activity than others. And so if you can advance the slide. So the first part of pairs is participation. This committee is going to have active coalition members that are going to be promoting Bank On. They're going to work with the collaborative, myself or Maria, on implementing some parts of Bank On. Also going to develop a process for coalition members and participants. And this is very, like I said earlier, we're laying the groundwork for this coalition. And so this committee, the participation committee, will be creating those tools that everybody that comes on board after us will have. Next slide, Maria. So the next one is advocacy, and this is going to be the advocacy arm of Bank On. They are going to be, advocating for policies that help North Carolinians get access to safe and affordable bank accounts, and then also going to be, advocating against policies that don't do that. They'll be working to support the use of data, tools and maps. We're going to be working on a Bank On data map so that folks or constituents that are interested in Bank On services can look on a map and see where they can receive these services at. And so this is the advocacy committee. Next slide is integration. And the integration committee is key. Tamika talked about it a little bit when she was talking about working with nonprofits, and David talked about it too when he talked about the wraparound services and other programs that Bank On can be integrated in. We need your help identifying these programs. We need your help looking at programs and saying, hey, this is going to work in there, this won't. And that's what the integration committee will do. Next slide is reach out or outreach committee. And this committee is going to be kind of like a communication or awareness committee. They'll help to develop or review Bank On products and materials that we'll be sharing with the Bank On Coalition throughout. They'll also be working with us on training resources and that sort of thing. Next slide. And solicitation, and this is to help secure financial support for Bank On and for the work that we do. And this will be supported by the leadership team. So in your, like I said, in the chat, there is a link for you all to sign up to participate or to volunteer to engage at some level. We hope that you'll all consider if you sign up now and something happens later, it's okay, but we're really interested in moving this forward. And please know that Bank On North Carolina is going to be a coalition or a collaborative effort, and it's going to depend on folks like you and myself and other stakeholders to move this forward. So with that said, are there any questions? None.
Tamika, this is Peter. Not a question. I just want to thank you for your leadership in getting us to where we are today. I'm really excited about this. Tamika and Ginger, thank y'all so much for sharing your experiences. I know bankers want to hear from other bankers about what to expect and how this is all working. And so what you shared today was invaluable. So I just want to thank everyone.
Thank you. Thank you. So if there aren't any questions, this is the end of our program. If anybody doesn't have anything, I'm going to hang back for a few minutes and